What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to go over the charts. Make sure you stick around for the whole video, too. We'll get into the smaller time frames on Bitcoin. We're going to look at the big picture, the big resistance levels. Then we'll take a look at our targets and into the smaller time frames. Also, I have some charts that are a year old, some of them older. It's gold, silver, XRP, Ethereum, and Litecoin. We're going to see how those are playing out. If you've been around for a while watching these videos, you'll know that I haven't changed these charts and how they're looking. So make sure you guys take a second out, scroll down, smash that thumbs up, leave your comments below if you enjoyed the video, and share them if you would. It helps get the video out there. If you usually watch videos and don't like, not just mine, make sure you scroll down and smash that like on any videos you're watching. It does help the YouTube algorithm and it helps people's videos get out. All right, let's take a look at the futures. So the Dow is up 19 points as of making this video. S&P down 7.25. NASDAQ down 45.75. Now let's see what's happening. So this is what we went watching in the Dow Jones, still in this falling channel. I do believe at some point we are going to come back down to these levels around that 28,000 point range. We may get a little bit of spike here. They may try to rally the market today or tomorrow. And if they do that, then we'll see a spike in Bitcoin. But if this does continue to sink down, then it's probably going to get pretty ugly for Bitcoin. And again, we're going to be looking at all those targets. Let's take a look at, okay, so you guys know I'm bearish on all markets right now, except for the DXY. That is the only thing that rises when all the rest fall. I've talked about that before. You see people say, buy silver, buy gold, hedge against inflation. If you've looked at anything from all the past market crashes, DXY is the only thing that rises. Once that's done rising, that means it's time to buy back into everything and ride the huge wave up. But I think that's going to be at least 6 months to maybe 2 years out. Let's take a look at the big picture on the Dow Jones. So this is on the right hand side. This is the Great Depression here, 1929. I know people think that can never happen again, which it's possible that it doesn't, but it is very possible that it does. That is how markets work. People think everything changes, everything's different. Markets are always the same. It's big money taking money from the average people, right? So if you look at the pattern seems to be playing out almost identically also. So this is just something to watch out for. Let's look at the DXY. This is the DXY in the 4 hours. So far, it's holding on top of the EMAs here. Our 55 EMA is around 109.25. If 109.25 breaks, I do expect us to hold this as support around 108.28. That's if this even breaks. As you guys know, my target's around the 112 to 113 range, which is the top of this channel. And if we zoom out to the daily, you can see it a little more clearly, but I do believe if we break this 112, 113 range, my next target's around 122. That could be weeks or months away. And then if that 122 breaks and we get support there, you guys know my big picture. On the weekly, we could see a huge spike. And how do I get this? Someone asked. I've showed it on many videos, but if you just take a measured move of this falling wedge here and you bring it up to where it broke, that will give us a target of 178.85, somewhere in that range. Obviously, it's not going to be to the dollar, to the penny, but somewhere in this range. If we break this 122 range, guys, this is what I'd be looking for. Does that mean it shoots straight up? No, it's gonna take time, just like this took time. So this big spike we had here, this took from 1979 all the way to 85, so 6 years. I don't think this one's gonna take quite as long. It could. We'll be keeping an eye on it. If it does take about 6 years, that would line up with Bitcoin possibly not seeing a break of the all-time high for, about around 10 years from when it hit 69K. And we'll talk about that in the video too, so make sure you stick around. If you guys are interested in trading, Check out Prime XBT, by far my favorite exchange. They don't trade against you like the scammy exchanges. I have a link down below. If you use my link and promo code SAVVY50, you can get up to a $7,000 bonus to add to your margin. Savvy25 will get you 25% off your fees. You can trade Dow, S&P, gold, silver, oil, everything all from one exchange. So definitely check them out. And you can have multiple trades in so you can hedge your own trades without having to set up multiple accounts. All right. So as of right now, you guys know on the monthly, we've been watching this monthly trend line. We did get up above it, came right back down though. So I think if we continue closing below this trend line right here on the monthly, bad news for Bitcoin. As you can see, our major resistance level that we need to watch for the monthly is around this 24,550, which is our 55 EMA, right? So that's all we really need to look at on the monthly. Anything below 25,450, bearish. Let's take a look at the weekly. So as you guys know, my Amazon to Bitcoin comparison chart, which was made on December 2nd. I also made a video. If you go to my YouTube channel, there is a video playing from December 2nd, where I talked about this being a possible bubble pop, just like we had in the .com on Amazon over here. What did that do? That washed out all the .com scams. We need to wash out all the crypto scams, right? I do have a theory we get a false bottom around November and then a pump up. And that false bottom would be around 75 to 8,500 bucks. But there is another theory I'm going to look at that we actually go lower towards the end of the year that would signal the bottom. But we'll be taking a look at it. I'll explain it. So make sure you stick around for the whole video. I also want to show you right here in the RSI. Once this weekly trend line broke right here, you can see that wave 4. And this isn't Elliott wave count, guys. This is my bubble pop pattern. And I've showed this in many other things, Sony, Nintendo, just how overhyped market bubble pops, right? Major speculation. But anyways, so once it broke up here, everyone got extremely bullish. This was about 120% rise. It don't look like it on the weekly, but when in smaller time frames, you can imagine how bullish people got looking at the smaller time frames, just like they do in Bitcoin. But all it did was came back down just to make another lower low. And that was about from low to low, March to September. So about 6 months, right? So if we get that, I'm looking for a bottom middle to end of next year. If we get the false bottom, that's if we get a bounce at the $7,500 to $8,500 range around November and rally into next year, I think then we get our final capitulation after that, just like we did over here. If you look at the RSI, would be the same thing. If this trend line broke, everyone would get extremely bullish and just to make a lower low. And if that happens, it takes a long time for a market to regain confidence and get people back in. So you can see this is Amazon. Now let's zoom out. We're still going to look at the weekly, this Amazon chart right here, but let's take a look at that. Right here it is. So it took about 2 or 3 years, depending on what you look at as the bottom, but it took a long time. When you're looking at a macro chart, as in a weekly chart, to find a bottom, you're not going to look for it on the daily. You're not going to find it on the 4 hour. It is a macro. It's going to take a while. And if you look here, look for bottom formations, just like we got here. Let me take this off here. Like I said, that was about 2 to 3 years. But if you look at this, what did it do? It made an inverse head and shoulders before breaking out. But it still didn't just shoot to the moon like people think Bitcoin's going to do, because I really don't think that's going to happen. I think it could be up around 10 years for it to break the all-time high, if it does break the all-time high. But the good news is, let me move this stuff out of the way. The good news is, if it does play out like Amazon, but you got to remember, Sony and Nintendo both about 15, 20 years and still haven't reached their all-time high again. So just be cautious of that. Let's put this back into the weekly. Oh, that was supposed to be the weekly. I apologize. But yeah, so there's the weekly. It took about 10 years to break the all-time high for Amazon. After that, what happened? Just insane gains. So that is a possibility, right? But I don't think we see a break of the all-time high for another 10 years or so. Look around, people. Look at what's going on in the world. Very unstable. All right, let's take a look at, this is the daily chart. This was back here when we called our 5 waves down. I told you guys, look for a massive bounce in June, which we got. Look for ABC correction, which we got a little bit higher than I thought. But nevertheless, I told you there was no way we were going to get to 100,000, which we didn't. And once we came back down, right up here is when I started talking about the Amazon to Bitcoin comparison chart. If we take a measured move down from this break of this blue trend line all the way down and go down to the bottom of the flag, that gets us pretty damn low, guys. Wait, is that the one I wanted to do? No, this one here. It gets us down to about that 8,200 range. So that's, you know, right around that 75 to 8,500 range I'm still looking for. We had all these targets. We actually had this 24.3 target way back here in December. I told you once that broke, that would become resistance. Exactly what happened. Same thing that will happen if this 17.7 is broke, which we're going to take a look at here in a minute. One of the other things we were looking at on the daily RSI here was we were expecting a major rejection at the top of this. Boom, we got it. I do think we come back down to the bottom of this. It could be all the way into next year before we test the bottom. Now, like I was talking about, there is a possibility that we go much lower and actually bottom this year. And that would be this count here. As you can see, we have alternate touches on this falling wedge. There's 1 touch, 2 touch, 3, and they're alternate top to bottom, right? Let me get this out of the way so we can clear this up, and then we'll go into the 4 hour. But what I do want to point out is it does look like we're making a descending triangle here. So once we break the bottom of this triangle, which as of right now is about 18.7, right? Break that, and that gives us the measured move all the way down to our low. That also matches up pretty close with the Amazon to Bitcoin comparison chart. And that would be sometime in October or November. End of October, beginning of November. If that was to happen that fast, guys, I would definitely think that could be the bottom and we would go up from there. The only safe way to know that would be a break of this trend line here. But we'll be watching it closely. And where is that trend line right now if we're looking at the daily? It's actually, let me make sure this is all lined up. A little bit down. So if we were to come up and break this in the next day or two, it would have to break 21 or 22.7, 22.8 range to get bullish. Anything under that right now is going to remain bearish. Let's go into the 4 hour. There's something else I wanted to point out, that we are getting a 4 hour sell signal if this candle, yes, if this candle closes below 22.14, this is a sell signal for the 4 hour. That doesn't mean it can't spike back up a little bit after, but as you can see, that all the EMAs cross the 55 here, the 8, the 13, and the 21 right here on this candle. So the next candle after the cross needs to open and close below the red EMA, which is 20,200. That is a sell signal. So it closed below the 20,250. This 4 hour is a sell signal. Now, if we're looking at this as a falling wedge, right? A falling broadening wedge, just going off the wicks here. These would be our targets. So if we come down here to the, let's say we get down to the 19.1 area, right? Which would be retesting the bottom of this again. If that does break, then we look for a test of this off here. 18.6 range. And if you remember, that 18.6 range has came out a lot. Let me get that back up here. Why did I delete that? So if we do come down here, get a bounce off that 19.1 and come back up, we could be coming back up to this range here, which would be the 200 EMA on the around 21,000, which would be the 200 EMA around on the 4 hour. But I do think we're going to come down, break this low to at least the 19.1, 19.2 range. But remember, guys, if we break the bottom of this triangle, it is going to get ugly, in my opinion. I also have what the false bottom may look like, right? right here coming down. Once we break this 18.6, we do have a target at that 17.6, which was our old bottom. Once that breaks, then we look for the 15.5. We may get a bounce there, come back up to retest this triangle before continuing down to that 75. Now, if that was to happen with the false bottom, we should see around that 7,500 to 8,500 the end of October, sometime in November. That would get us our bounce. Rally into next year up to around that 15, 16,000 range, which would be 100%, would look huge. People would get super bullish. It would probably break that weekly trend line on the RSI, and then only to come back down and make our lower lows. So be careful there, guys. I know a lot of people have trouble dealing with emotion, but just be careful. All right, this is my gold chart from about a year ago, and it is playing out beautifully so far. Gold is about to break its low again. My target for gold is around 1561. If we are in a longer-term bear market, I do think we'll go much lower than that, but I've had this target for about a year, still heading there. Same thing with silver. We've had all this for about a year. The first target was 20. I said if that broke, looking for 15.5. Still look like we're headed there. Right now we're getting rejected at 20 again. I do think we will get down to this 15.5, possibly much, much lower. Another chart that's a year old, Ethereum. We made these targets once we broke out of this rising wedge here. We had our first target at 1919. I told you if that broke, that would become major resistance. It has become major resistance. And if we take a measured move looking at this as a bear flag, that's what got us, once this broke here, that's what got us our possibly all the way down to around the 300 range. My first target when we break this 1350 again will be about 650 to 700. Probably get a bounce in that range, you know, break this old low, come back up, and eventually if we do come back down and break the 650 to 700 range, I'm looking for around the 300. Also, I did show you guys this over here when this happened. I told you the 1919 would be major resistance, right? And then we had the slightly lower highs right here and higher highs in the RSI. We were looking for that hidden bearish divergence. Boom, it flipped it around just like we expected. And we have Litecoin. This is also about a year old. We made this target here for Litecoin in the low around the $25 range, right? And we made that way back here in December when this broke. Told you guys to look for that. And then lately, once we were in this wedge here, we had a target. You could go back and check my videos months ago at 68.31. We hit it almost to the T. Expected a rejection there. Now we should be headed down to our 24.50 range, somewhere in that range. We'll see if it plays out, but it's looked pretty damn good so far. And last but not least, XRP. This chart is also a year old. Right at the break of this, we called this, and everybody called me crazy as usual. And look what happened. So now what we're looking for is if we come down and break this 31-cent range, 18 cents is my next big target. Could be months out. Nevertheless, that's what I'm looking for. I actually think if this 31 breaks again, it's going to be pretty harsh, be a pretty quick drop to the bottom, but could go much, much lower than 18 cents if we are in the bear market, I believe us to be in. Thanks for watching, guys. Don't forget, smash those thumbs up, tick your notification bells to get you notified when I post new videos. Subscribe to the channel if you haven't already. If you like these daily updates, make sure you share the video. Take it easy, guys. I'm out.